Hi, Ian Foster from BeAWinningTrader.com. This is my market analysis for the week commencing the 2nd of October 2023. I'm going to begin at looking at the pound yen, which is the market that I'm actively trading in my Discord channels. And you can see here, obviously, during the weekend, we begin by looking at the weekly chart. And what's very important here is last week we traded this bar here was inside this bearish bar. And the key figure or the handle or the price, whatever you want to call it, for me on the pound yen is that high of the week 2 weeks past. And that high there of that bearish bar is 183.48. We made a high this week just closed on Friday at 183.01. And you can see we've just opened, because I'm doing this analysis just after the 10 p.m. open UK time. And we have just opened around the close. We've opened up a few pips in relation to Friday's close. So I'm looking at the daily chart, and you can see the daily chart. We had this high here, and then the market closed very bearish. Now, that would also indicate to me that we have got bearishness on the daily chart, indicating that we should take the low of Friday out to the downside before the high. And also we've got bearishness going back 2 weeks past. Also, something that's very, very significant in relation to price action here, you can see that this is a very bearish bar from 1, 2, 3, 4, 5, 6, 7 trading days ago. And that low there is a low of 180.76. And that, technically speaking, should be broken to the downside before this high. Now, everything looked very, very, very bullish on Friday in the early part of it. But quite significantly here, everyone, quite significantly, that high was 183.09 here. Now, if that had been broken, that's like turning a bearish scenario that has been in place for the last 6, 7 trading days. Not days, trading days. But that market only went to not 09, it went to a high of 01. And it came off. So if I just draw that horizontal line across here, that is just to show you, you can see here, there's a gap. The power of price action and knowing how to read even the very simplistic basics of price action is very key, because once you knew that this market had not broken that bearish bar high and it started to come off that, that then meant on an intraday basis on Friday, it would have given you something to look for in relation to an intraday sell signal. That technically is what you're looking for. So that is still in place. So we've got a bearish bar of 183.48. This high here, up here, high of that bearish weekly bar, 183.48, and the daily at 183.09. So there are the two key figures for me. And then if we go on to the 4-hour chart, you can see that it's just starting now to turn blue. Now that's only, it's not a closed bar. And these bars here, you can see the 4-hour bar that was bullish and it broke that to the downside. There's quite a lot of work to do if this market is to head back up north. So I, again, at this stage, will be watching the trading on tomorrow morning, Monday morning, and I will be analysing this to see what direction we go in, because you can see that the 1-hour charts were in blue mode, indicating strength based on the sum total of buying and selling pressures, and now they went back into green mode. So between that, between the dailies and between the weeklies, there's a little bit of work for this market to do if it is going to go into a new run upwards. Okay, and again, if I go back to the monthly charts on the pound yen, I will be very much looking at these lows, because this is a monthly bar high, which is a bullish bar, and it means that it should take the high out rather than the low. And that low there is 180.40, I believe. Yeah, 180.40. And we went to 180.76 and turned round. So we did last week was the low. So therefore, when the negativity was there, that bullish monthly bar low of 180.40 is still in place. So we've got a little bit of a fight going on between the monthly charts and the weekly and the daily charts. So again, um, the key figure if this market was to go lower would be a break of 180.40. If it's to go higher, the key figure here is going to be breaking certainly firstly 183.09 and then this 183.48.49 handle. That is where we're going on the pound yen. Now, if we go and look and do the same analysis in the euro dollar, you can see again the same thing happened in the euro dollar. We had a very bearish bar, so we had on Wednesday. And then we had a bullish bar on Thursday, and that there in its own right, everybody, once you break the high of a bearish bar, when you should technically speak and break the low, that is like flipping a coin on its head, and it would turn a bearish scenario, in this instance here, into a bullish scenario. What happened then on Friday? The market started to rally, as expected, after the Thursday's price action, but then it sold off. It's sold off, and we've got a very bearish bar close here. That close there is closer to the low than it is to the high, meaning that this low here should be broken to the downside before the high. So we put on the weekly chart, and you can see we've got a lower low, and this low, a lower high, and we've got maybe a 50-50 bar close. So the euro dollar on the weekly chart is really sitting on the middle. What do I mean by a 50-50 close? The close is roughly at the mean, and the mean is the mid-range of the bar. Okay, the mid-range of the price between the high price and the low price. And how do we determine that? We determine that quite simply by getting the high price at 106.55 and the low price at 104.48. We divide them by 2 and get the average price, and then is it closed above or below that price? And visually, I can see it's very much like a 50-50 bar. So the euro dollar is in no man's land as far as the weekly chart is concerned. As far as the daily chart is concerned, the bullishness that was created on Thursday has been negated a little bit on Friday. And certainly initially, I'll be looking on the Monday morning for this market to go lower. I'll be looking for sell signals. But again, they will not be taken blindly. They have to be with lower highs, lower confirmed highs, and a red bar. So the 15-minute chart will probably be my chart I'll be keeping an eye on. We're in red bar mode there, and I'll just see how this develops. Okay. Now, if we go to the pound dollar, otherwise known as cable, we go back to the weekly chart here, and you can see that we've actually got a bullish weekly bar close on cable. Why do I say that? Yes, this is like a reverse strategy. So maybe there is some strength going to come into sterling. It has, you look at it's went from 131, nearly 132 up here, way down to 121. It's fallen quite considerably. So nothing goes down forever, as we know, and nothing goes up forever. So in that understanding, we've got a close here that is closer to the high than it is to the low, and that would indicate that this market has got a greater probability for this coming week of taking the high of last week out to the upside. And that high is 122.71. That's gapped down here in the open this evening, but again, is that only creating up buying opportunities? It possibly is. So if I put on a daily chart, you can see that we've actually gapped down outside the close and the low of Friday, and the market has tried to rally up to the close. So there's been a gap down open here on Sunday evening, Sunday night, UK time, Sunday afternoon if you're in the States. So therefore, it's going to be quite interesting what happens here. I say Sunday afternoon in the States. I should say Sunday evening. Okay. So anyway, again, the exact same thing. Buy or sell a signal. I will have to very much make sure that we've got a lower confirmed high and we've got red bars. I will not be trading that tonight. I can see already looking at the 15-minute chart that we've got like a double bottom in here. So we've got an area here from which this market needs to break. We've got red price bars indicating that the sum total of selling pressures is definitely greater than the buying pressures that was previously in place. So let's see how it moves from there. But again, looking at the bigger picture, we've got a bullish weekly bar. So we've got a bearish daily bar that has already achieved its price action objective. Because what do I mean by that? You take Friday's low out to the downside. Friday's low was 121,804 and the low already is 121,791. So it's already achieved that. So therefore, we have to start looking then at bigger magnets. So let's be able, we know with very little hurdles. Remember, if we've got in any market that we're trading, if we've got a bullish bar, okay, or a bearish bar, but let's assume we have a bullish bar here, and this market gaps down. The only time that that bullish bar is negated is when that low would be broken without that high being taken out to the upside first. That's the only time it's negated. And if a market does that, then all that is doing until that low would be broken to the downside, when we know, technically speaking, based on probabilities, that the high should be taken out to the upside, all that there is doing is letting us know that we have got an opportunity. And the opportunity we're really looking for to go with a bigger picture trend would be a buying opportunity in this instance here. This bar may fail. We know that, but that is based on our probability. Now then, what we look for on an intraday basis or an intra-week basis is a higher confirmed low to take advantage of that based on what the bigger price chart, and in this instance the weekly chart, is telling us. And that's how we trade. Keep it simple. You can trade every signal you see with lower highs or higher lows and ignore what the bigger trend is. The only difference with that is that you're going to be more active in the market. You're going to be in and out more. And I like to try and get into a trade in the direction of the bigger trend. And it means then that when that market starts trending in that direction again, you've entered a trade that you can stay with and stay with and stay with. And that's how we gather or accumulate more pips, more points, more pounds, more dollars into our account by not just taking small profits, but letting our profits run when we can and keeping our stops and our losses small when we can't. So the next market I'm going to look at is, we will look at some of the equity markets here now. So I've looked at the pound, the dollar yen. Before I do that, the dollar yen has been a very strong market, so it has. And you can see here, if we go up to the 4-hour chart, look at the blue bars and the strength that this market has had. And if we follow that up by looking at the weekly charts, you can see here that this high up here is 151.94. And we're at 149.53. So I think there's going to be further upside movement, at least to test these highs up here. Okay, at least test those. We've had a higher confirmed low down here on the weekly chart. Everything looks pretty bullish. We've got a bullish close on Friday, of which we've gapped up now. So wherever the market will come down, it will close that gap, and then it will start giving us a higher intraday low. In other words, creating a buying opportunity. So the dollar yen is bullish. So this is what to look out for. Remember, do not overtrade. Do not try and trade too many markets. Certainly, if you're trying to trade off some of the smaller time frames, you definitely must not do that. Concentrate on 1 or 2 markets. There's plenty. There's plenty. Being disciplined, there's still plenty of opportunities and plenty of pips or points to be had. Now, equity markets we look at, and I'm just going to very briefly go over the equity markets. We've got the DAX weekly chart. So let me just get rid of some of these. In other words, delete some of these trend lines to clear up our chart, because there is nothing as horrible as having a clogged chart, everybody. So again, what we've got in the DAX here, we've got a lower high and a lower low on the weekly chart. And we've closed probably a little bit bullish, everybody. Okay, in other words, it's closed slightly above the mean. So the difference between that close and that high is probably slightly smaller than it is between that close and that low. And what that means is that the buying pressure in this market, when you're analyzing a single price bar and price action, the buying pressure is from the low price to the close, and the selling pressure is from the high price to the close. And whichever is the greater indicates whether you've got a bullish or bearish bar, which then in turn indicates whether you should be, based on probabilities, whether you should take the high or the low of that bar out firstly. Okay, so this is very much like a 50-50 bar, but I think there's a slight bias. And I can check that there because I can just put in 15,574, which is the high price, and the low price is 15,131. And if I divide that there, that will give me the mean price, average price, which is 15,352. And look where it closed. It closed at 15,354. So visually, I was pretty dead on. Okay, I said slightly bullish, but like more of a 50-50 bar. And that's just letting you know where the DAX is at this minute in time. All right. But and just like the equity markets, one day they're bullish, the next day they're bearish. So, but the only way you can get a bigger feel for the market is by looking at the slightly longer time frame charts. Now, if we start looking at the daily chart, you can see what happened here on Friday was we had a very bullish bar, or sorry, a lot of bullish price action movement in the earlier part of the day, and it came back down and started to close bearish. Okay, so indicating to me coming out of red mode, the 4-hour charts are in green mode. Again, I like looking at the dailies and the 15-minute and the DAX, and you can see here the DAX, where although this is a higher low, where the market moved a nice signal in here in the DAX, so there was on Friday, and the markets came back down to retrace. So there's the key level for the DAX on an intraday basis on Monday, and that is that low at about 15,291. So that is the key figure. We're at 354. So we are 15,291 is the key figure from an intraday perspective, because that's the last confirmed higher low on a 1-hour chart on the DAX. If we break that, folk, that means that we've changed trend. We need confirmation of that trend. And how do we get that? We get that by getting a lower high. Okay, so from the DAX perspective, we're looking for this market to certainly, based on the price action of Friday, take that low out to the downside before the high. So I would be expecting, based on probabilities, that low to be taken out at 291. But again, it has to happen. We don't want to predict it. That's what it should do based on probabilities. Let's get confirmation that it does that. And then if we get a lower intraday high on even a 15-minute chart, we could maybe end up with a lovely intraday signal on the DAX. Okay, so the S&P 500, the same thing really. The weekly chart, as you can see here, is very much the same as the DAX, but closed probably slightly more bullish than the DAX, but certainly with a lower low and a lower low here than this low, a lower high than this high, this is a lower high. And we have got a close that is closer to the high than to the low. So it's like a turnaround, okay? And the one market, these were all very bearish last week. The only one market that wasn't so bearish was the FTSE, because it was trading inside a very bullish bar, weekly bar from the week before. So they're now starting to get this in sync when you look at the weekly charts, these major markets, the US markets, the DAX and the FTSE. And, if we achieve the daily price action objectives in the early part of the week, in other words, take the lows of Friday out, because again, the same thing happened here. We've got a very bearish, the market you can see rallied up, but look at this close here is closer to the low than it is to the high by a long way, and therefore we're into that would indicate that it should take this low out to the downside first. If it does that, folk, I think we're looking maybe for a buying opportunity, not necessarily on Monday. It may come in on Monday, but there could be a bit of buying pressure this coming week on the equity markets, and they will then go up and maybe achieve the price action objective. And let me just show you what's even strengthening that further. If I go to the weekly chart of the FTSE, this is the weekly bar that I'm talking about. This bar here, which is the bar not last week or the week before, but the bar 3 weeks past. That bar 3 weeks past is a bullish bar, and therefore that's telling me probability-wise, it should take the high of that there out, which is 77.57, out to the upside, break it to the upside before it should take that low out. And that low was down there at 74.75. You can see what we done. Last week we traded inside this bullish bar, and the week before we traded inside it. But remember, probabilities based on the weekly bar chart from a few weeks past is to take the high out at 77.57. Now we've got the American markets also, and the German market also on the weekly chart, just about confirming that there. So unless there's a real turn to the downside, which can happen, we know, okay, and this is why we have to read the markets and trade what we see. But based on the bigger picture analysis at the minute, these are starting, in my opinion, starting to line up. Why we could have a completely different opinion come Monday, but this is exactly what's happening. And I know, technically speaking, and I'm telling you now also technically speaking, that the only time that this FTSE market's going to fail is if it breaks that 74, 75 to down to the downside. It's the only time that bullishness is now negated. So that bullishness based on a bigger time frame, in other words, in this instance, the weekly chart, that bullishness is still going to be in place, providing that market trades no lower than 74.75. It's always going to be trading. The objectives will always be to take that 77.57 out to the upside. And if we take a look at the Dow, the US 30, we've got something similar, folk, on that, because in fact, it's the one market that has bucked the trend. We had something similar in that, and it's turned around because it's very bearish now on the something that was bullish on Thursday is very bearish now on Friday. Sorry, I missed this here. We've got an outside vertical bar, which is the single most powerful vertical bar on the in any price on any market. This bar here, it's made a higher high, it's made a lower low, and in this instance, it's got a close closer to the low than the high, which means it's a bearish bar. And on the Dow, would you believe, it's got a very bearish. The Thursday's close was definitely starting to look bullish, and look what's happened with Friday's price action on the Dow. It's itself was weak. So that again would be lining up what we've got on the price action perspectives on the daily charts of the S&P, of the Dow, of the DAX, that we should take the lows of Friday out to the downside first, but then keep an eye on the weeklies. Now, we don't need to keep an eye on the weekly on the Dow here because it should break the low. But if it does break that low, is that going to go lower, or is that market starting to reverse and then help the S&P, help the DAX, help the FTSE achieve its weekly price action objectives, which are bullish? Okay, so again, it's very much everybody at this minute in time in trading, and has been for some time, I should say, not just this minute in time. It's very much of trading what we see, but looking at the bigger picture and be aware of what's happening on the weekly charts. Be aware of what's happening in the daily charts. And another little tip for you all, and that is keep an eye on what the Tuesday close is on a daily price action perspective, because if it's a bullish close, that can be the intra-week trend indicator. Okay, if you get a bullish close often on a Tuesday, that will mean that you're going to get maybe 2 or 3 days of bullishness. Or if you get a bearish close on a Tuesday, 2 or 3 days of bearishness. And again, if that has got a bullish close on a Tuesday and you've got a bullish weekly bar, then you have a real high probability of that market going up for a couple of days. If you've got a bearish close on Tuesday and a bearish weekly bar being carried forward from the week previous, then the same thing applies, okay? But it's not set in stone, everybody, and this is why we just take this based on what we see. We take it as a knowledge, which is very, very key. Now, just before I go, because we don't want to have this too long, we'll take a very quick look at gold. And gold is very bearish, folk. We've got the weekly chart bearish. We've got, again, very much like the Dow Jones Industrial Average, the Dow US 30, an outside vertical bar to the downside. Sorry, that's the wrong one. I apologize. It is very bearish. I knew it was. It's actually even more bearish than the Dow. We have a very bearish daily chart, and obviously the weekly chart is really, really bearish. So gold looks like going weaker, folk, and this is the key area. I think gold's going to have to make a decision at, and that's around the $1,800 level. We're at 1848, so there's going to be, it might not go straight down, folk, but there's certainly going to be further weakness on gold. I'm pretty confident with that. Now, again, if we take a look at crude oil, folk, has been on, look at this, from the 60 down here, look at a double bottom, it all came off here, and that lows was $66. That market went up in the most beautiful way, as you can see here. And this market now, this last couple of days, has been very bearish. And if we take a look at the weekly chart, which is what we need to get a better idea, you can see that that close is closer to the low than the high. So perhaps crude oil is going to take a little bit of a breather and now start giving some of it back. But you can see here that this market is very much, in an uptrend. And then in retracement here, I will expect it to come back down into those highs in there and give us a higher low at some stage. Not initially, and maybe it'll not go straight down, unfortunately, because crude oil is one of my markets that I love trading, the crude oil futures, and it is one that I do on an intraday basis in a regular occurrence. I'm not saying it's a daily occurrence. It used to be a daily occurrence, but with that much going on now, it's not just always every day. But certainly I trade it really regularly, and it's a very good market because there's one thing about it. Most days it will make a move to give you plenty of opportunity from which to make a few pounds. Or even if you have had a small loss or two, that you can get your money back and still end up the day being in front. That's why we like volatility. But with volatility, we need a little bit of follow through. So just to conclude, we have got a initial bearish situation on the equity markets, expecting to turn round. Or if they don't turn around, we know the key levels from which they need to break, which will indicate further weakness. And that is by looking at if we've got a bullish weekly bar. If it breaks that low of that bullish weekly bar, when it should take the high out, that's the area that we know. That's when the market is telling us, well, hold on, this market is now heading in the opposite direction. And then if we go and look at our, most importantly for me, the pound yen folk, then I am very much, again, looking for this to break down through and achieve the weekly price action objective down through these lows of 2 weeks past, and that's break through 180.76. And then I will look at that 180.40 level there, because that would be a hurdle. If I was short, that this market certainly would have to get through. It may not get through. We're at 183 at the minute, so we've got plenty of pips there, and certainly 100 or 200 pip move would be very nice at this stage and get us off to a real great start to the new calendar month. And again, the same thing applies. Just to conclude, remember, pound yen, bullish scenario on a weekly chart, but a bearish scenario on a daily chart. So we've got some daily price action objectives to be achieved before this market will perhaps start picking up and start heading north again. Okay, and the euro dollar is very similar. So I hope that helps. Remember, on the description, there is a link from which you can join my Discord channel. We've got a 2-week free trial, and then it goes into subscription basis where I will be putting signals up. You can copy my signals on the pound yen, and again, we're adding one additional market very, very shortly to that, and which would be an equity market, not be another forex market. I think we're going to be trading the DAX on that. So click on the link in the Discord in the description box and click and join the Discord. You've got 2-week trial, folk, and then you can subscribe once you see the action going to be the action and the product and the signals that I put up is going to be worthwhile. So remember, if you need to speak with me, send me an email, ian@beawinningtrader.com, beawinningtrader.com. If you want to learn more about our software trading tool and our education platforms, it's www.beawinningtrader.com. And if you want to put /masterclass, which I will put in here, you will be able to actually watch a condensed version of our trading masterclass, from which we give a much more in-depth explanation of how we trade the markets. Okay, so I'll just put this in now. I've got thick fingers, folks. Where's it there? So it's HTTPS colon slash dash be a winning trader.com/masterclass. All right. Look, thank you very much. I hope you enjoy watching and listening to me on this video. Thank you.